Welcome back to the Sense of Security podcast. I'm Cassidy Clement, Senior Manager of SEO and Content at Interactive Brokers, and today I'm your host for the podcast. Our guest is Scott Bauer, CEO at Prosper Trading LLC. Alternative and renewable energy have gained much momentum in the past several years. But what exactly are the drivers of this space? How can one invest in the sector? In this episode, we're going to discuss all that and more. Welcome back to the program, Scott.
It is a pleasure to be here. Thanks for having me.
Yeah, of course. So in the wild world of energy, and I guess you could say the hot topic of AI and semiconductors, the correlating topic is energy. How do we do this? How do we actually map out how much energy is needed? And how do we work in a way that's actually going to incorporate alternative routes and renewables? That was the main inception of this podcast, is looking at the commentary and going, wait a second, how do we power this?
Isn't that the $100,000 or $1 million question? And as you said, AI and the like are just going to be taking up more and more energy. When we look at alternative energy, the alternative energy sector, we're looking at things such as solar and wind, hydro, geothermal, biomass, which I don't even know what that is. And then obviously the real hot button recently has been nuclear. There is a lot of resources that make that up, and hopefully we'll be able to accommodate all of the need that we are going to see, not just in the coming months, but in the coming years as AI really expands.
So from your experience and your background, how exactly do you see the energies of the alternative sector in the day-to-day of the financial market? Because I think a lot of people listening, they may have taken maybe an environmental science course in college, or maybe they're just familiar with it because of the current events or what's in the zeitgeist now. So what exactly make up the energies of that sector? And what are those that are aligned with the financial aspect, which is like the investment?
Sure. What we have to understand is right now, renewables or alternative energy accounts for about 13% of the world's energy. We can look at that one of two ways and say, wow, has this been growing and growing recently over the last couple of years? Or, wow, there's a lot more room for this to go. So the switch to clean energy sources like wind and solar, hydrogen, they not only help reduce the impact of climate change, but they also address air pollution, health challenges, and the like. Anybody that wanted to look at this sector, not just for the feel-good nature of it, right? Like we're doing something really good to help the environment, but from a money-making standpoint or an investment standpoint, there's a lot of opportunity out there.
So when we're talking about the investment standpoint, what are the ways that investors could get exposure to the energy space? A lot of people may initially think ETFs, but what are the other elements or ways of entry to gain exposure to the sectors?
Yeah, I actually think that for someone casually looking into this, the ETFs are the way to go, because you don't have to then necessarily choose just one individual stock or one or two different stocks. So if you're really excited about investing in wind, in solar, you can look at one of these mutual funds or an ETF. And for those that don't know, these funds are like baskets of stocks. So one fund, you get exposure to many companies all at once. And ESG funds, they're graded in terms of their performance when it comes to environmental, social, and governance factors. That's a hot topic. That is a really hot topic. Now, there's upside to doing that. There's also some downside that maybe if you're in one of these funds, it doesn't include the next big stock that maybe takes off, and whether it's nuclear, solar, whatever it is. So that's probably the easiest entry for someone that wants to get into this space. Otherwise, you got to do your due diligence and really look at the stocks that make up this sector. As I mentioned earlier, the nuclear stocks right now are the ones that are on everyone's hot button.
So in the past 25 years, it seems, based on my research, that's where there's been a real hotbed of growth. We mentioned AI and semiconductors. You also mentioned ESG. But another area that I found interesting was the energy independence area, which is countries realizing, okay, we're moving towards a very technologically forward growth. And What we need to do is make sure that we have the energy to sustain this and finding a way to do this, we'll say in house. But what are the other drivers that you've seen within these spaces or this sector?
Sure. So, as you just said, technology is first and foremost, and technological innovation that does play a key role in this energy transition. And the developments that we have seen in solar panels, wind turbines, battery storage, boy, that has just grown and grown. The economic landscape worldwide really is shifting towards renewables, which are becoming more cost competitive, just than fossil fuels. Just like any sort of new product or new transition, things get cheaper and cheaper along the way. Investment patterns, places that people are putting their money, they're increasingly favoring sustainable energy projects for long term benefits, lower environmental impact. There is definitely concern about policy and regulatory frameworks. It's actually in the news right now, some of the tax incentives that are out there that may get taken away. But this is definitely a place that I believe has a ton of long-term growth still.
So, when somebody is looking to incorporate alternative energy or renewables, or even just consider it as part of a driver, something that's an impact, something that's a blocker of their current financial strategy, what are some things to keep in mind? I know you mentioned cost and you mentioned legislation, but it seems like it goes a little bit deeper than that, especially when you look at it at a broad scope.
Absolutely. And nobody can look at this as you're going to make a fortune overnight. Even though I believe there's so much growth to this sector, it's going to take a while. If it's really something that I look at, and what I would tell someone, whether it's one of my kids or anybody looking to invest, think about the long term. Don't say, hey, how am I going to make X percent over the next 3 months, 6 months, year? So there's a lot of consumer enthusiasm around energy. And energy companies are finally now seeing their initial investment in renewables starting to pay some dividends, which means they're making some money and they're going to keep putting that into capital expenditures, bigger projects. So this is definitely something that I look at with a 5 year, maybe even a 10-year time horizon. So if you're looking for a sector that could be the next Mag 7 or the next AI sector, I really think this has some possibility here, but it's not going to happen overnight.
So there's obviously more of a long-term look at these types of investments, of course, because like you said, the technology, while it's been around for a while, it's still not as widely adopted. But there's a lot of job creation associated. There's a lot of, I'd say, a little bit more of a positive public perception in
Sure.
the past decade or so towards it. But from your years of experience in the market, when did you see it really come into its own or become more popular or part of the mainstream as an actual impact or element that people were considering when making larger investments or creating portfolios?
This has been around for, we can call it what, 3, 5 years, maybe even 7 years, where the start of this was. But it's really over the last, I'd say, honestly, 12 to 18 months that this has become a force, that this has become something that whether you're an investment advisor, a passive investor, retail, you're a trader. And again, I think it's still very much in its infancy. It's not too late to get in. People always say, I missed the boat. I got to wait for a pullback, that sort of thing. I don't think so. I think if you are reasonably versed on this sort of sector, then it's a great place for a longer term investment.
Yeah, those are some great points. I think a lot of people initially look at these types of topics, especially when it comes to ESG, because of how it's been about a 5 to 10 year
Yep.
time where it's morphed into what it is now. It took
Mhm.
time for people to understand the terminology, understand what was associated to it.
Sure.
And there's elements of FOMO because now the need is higher than ever, at least from what I've come to know as reality as a young adult. There's more need now more than ever for certain companies to have a large amount of energy at their disposal, especially these companies that are in areas that have large evaluations. Because when you start to get an evaluation, the idea is you want to meet and exceed it consistently. So if
For
you
sure.
don't have the correct amount of energy for your product to expand, for people to be able to utilize it, there's going to be a little bit of a concern there. So it's definitely interesting to look at it how it's morphed over the years, especially with the push and pull of adoption in this
Yep.
space.
Oh, no doubt about it. And while the cost of equipment, such as solar panels, continues to go down, just as technology matures in any area, those prices come down. The cost of actually harnessing renewable energy, that's still very expensive. And that to me is a place that over the time horizon I was talking about, 3 years, 5 years, that's really where I think big economies of scale can come into this sector here. And that's where I really think some nice investment returns could possibly be down the road as those costs of harnessing that energy becomes cheaper and cheaper.
Yeah, you hit on some great points today, Scott. Thanks for joining us.
My pleasure. Thank you so much for having me.
Yeah, sure. And as always, listeners can learn more about an array of financial topics for free at interactivebrokers.com/campus. Follow us on your favorite podcast network and feel free to leave us a rating or review. Thanks for listening, everyone.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell, or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives, or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice. Alternative investments can be highly illiquid, are speculative, and may not be suitable for all investors. Investing in alternative investments is only intended for experienced and sophisticated investors who have a high risk tolerance. Investors should carefully review and consider potential risks before investing. Significant risks may include, but are not limited to, the loss of all or a portion of an investment due to leverage, lack of liquidity, volatility of returns, restrictions on transferring of interests in a fund, lower diversification, complex tax structures, reduced regulation and higher fees. Any discussion or mention of an ETF is not to be construed as recommendation, promotion, or solicitation. All investors should review and consider associated investment risks, charges, and expenses of the investment company or fund prior to investing. Before acting on this material, you should consider whether it is suitable for your particular circumstances, and, as necessary, seek professional advice.
Mutual funds are investments that pool the funds of investors to purchase a range of securities to meet specified objectives, such as growth, income, or both. Investors are reminded to consider the various objectives, fees, and other risks associated with investing in mutual funds. Please read the prospectus accordingly. This communication is not to be construed as a recommendation, solicitation, or promotion of any specific fund or family of funds. Interactive brokers may receive compensation from fund companies in connection with purchases and holdings of mutual fund shares. Such compensation is paid out of the fund's assets. However, IBKR does not solicit you to invest in specific funds and does not recommend specific funds or any other products to you. For additional information, please view our mutual fund product listings.